What's going on, guys? I hope you're doing well. Today is going to be a slightly different video. I'm going to be talking about the different types of, I guess you could call it investing, but one is going to be slightly more aggressive and one is going to be a little bit more passive. Now, to those of you that have come over from my other channel, this is going to be more of a trading style video, similar to how it was on that I do on my FX channel. A few differences, but I'm just going to be talking about the differences between these approaches. Now, this is not going to be with leverage, although leverage can be applied. We're going to be talking about why it doesn't really matter about leverage with most crypto assets. And to be honest, just with a regular, position sizing, it can actually be a very, very valuable tool. Okay, and so I'm gonna make this super quick. So I hope that you enjoy this video. If you do, drop a like, all of that fun sort of shit. And I'll see you on, what am I talking about? It's because I just made another video and I finished it saying, yeah, I'll see you on the next one. But obviously this is the next one, so let's enjoy it. So again, with Bitcoin, yesterday I made a video where we were talking about what would happen with Bitcoin. And, I said if it did break this rough sort of level here, then I would wait for it to breach this level down here for liquidity. I think that it's likely to come into one of these two zones right here, but I'm not just relying on that on its own. I then want confirmation in terms of breaking structural highs to then confirm that we are showing signs that the bulls are willing to step in. And then what I've marked out here is two potential ranges. Now 5%, 5.79% up here and 11.11% to the all-time highs up here. Now, of course, this is 99% technical base right here, although I have done my fair amount of research onto Bitcoin and just how the state of everything is. And I do think the bull cycle will last for another couple of months, really somewhere in the kind of 2 to 4 month range. I think after that, we will begin to see a bearish cycle begin. Okay. And so as the first thing that I want to talk to you about is, first of all, nothing is financial advice here. This is all just my opinion. So do your own due diligence. And the second thing is understanding risk, okay? Because if I am looking at specific targets, the difference between passive and aggressive investing is we are trying to time the market in a sense. Now, this is obviously going to be a lot more risky. And so it means that we are going to be defining where we are getting in and where we want to be automatically taken out. And so right here, although it says 5%, if we were, just getting involved and we didn't use any leverage or anything like that, then technically this would be, if this is 5.79%, and this is basically double the risk that we've got here because this blue area is bigger than this purple area, then we have essentially got somewhere in the region of 2.85 or 2.85% risk without leverage right here. So it's 2.85% risk roughly to the stop loss, and then about 5.79% to the target. Up here, we've got 11% up here to, again, about 2.85% risk here. And so this is going to be more aggressive because you're trying to figure out exactly where price is going to go and within what range. Now, it does require a decent amount of technical knowledge. And if you would like to see some more videos about how I'm looking at this for crypto, then let me know. But this is a very, very interesting way of doing things. And it's one that I'm definitely a lot more comfortable with. The passive approach is going to be just looking at some basic fundamentals, essentially asking yourself the question, is the current market cap, so the value of this, undervalued in comparison to where I think it will be in the future? Because that's it. Because if it's undervalued now based on where you think it will be in the future, let's just say we're on Ethereum, $500 billion market cap. I think it's around that, might be more now. Then the only question is, okay, do I see this market cap, going up in the next however long you're looking to get involved in? And if you do think that, then great, it's undervalued and therefore it's a logical investment. And the quality of those investments will be determined by industry, diversification, how well you can diversify, and also how good you are at estimating the value of the industry and working backwards. Okay. Nice and simple, guys, nothing too complex. And so that's going to be more passive. It doesn't require as much attention, whereas something like this is going to require more time, more attention, paying attention to the price action, understanding how the price action, or if you use indicators, how the indicators work and all of that fun sort of stuff. So that's pretty much it. I just wanted to make this video to show you the difference between these. In fact, I will show you a couple more examples here, but that's, like literally, if you want to be more aggressive about it, this is the way that I would personally approach it. And it's very, very interesting because it is similar to how I trade FX, except this would be kind of without leverage. So it's an interesting way of doing things. Okay, so yeah, so let's go through another example here. So let's go to Ethereum right here. Just cut this all off. So let's start on the weekly time frame here. So we breached above, just clean the chart up a bit. So we breached above all-time highs. We have had weekly closes above, unlike Bitcoin, but we haven't had a monthly close, I don't think. No. Okay, and so as we work our way down, I'm looking mainly for structural levels to begin with. That is my first point of reference. And right here, we have a structural level from this wick right here. Now, what is the significance of this to me? Is this the only level I'm looking at? No, I'm also aware of this level down here. Why this level? Why not this level over here? Well, because this level, we have a decent pullback. We are breaking past some lows of previous candles. And that to me is a more meaty, a more chunky pullback. And so it is, I'm always just aware of the more aggressive and the less aggressive structural points. And so to me, as long as we stay above these, we're going to be mainly bullish in the short term. This is not talking about, oh, Ethereum's going to 20,000. Like, this is short term, okay? And this is with a more aggressive approach. And so again, we see a similar thing that we saw in Bitcoin right here. We see it kind of coming off this level right here. Let me just make this a little bit. There we go. So we see it bouncing off this level here. Again, similar to in my Bitcoin video, we were expecting it to come down below these lows if we're going to go higher, but staying above this line ideally, but this line okay. Either way, though, it doesn't matter, because as soon as we go down, we're waiting for the same thing. We're waiting for structure to break in our favor and then confirm that for us. And then this would be the ideal kind of setup around about here. Now, alternatively, a higher time frame can be used and candle by candles can be used and stuff like that. But I don't really want to, bore you or kind of talk to you about that too much in this video. I just wanted to give you a quick kind of breakdown as to the differences between these two. It's not complicated. It's very simple. If you'd like to see me doing this live and breaking down exactly what I think is going to happen, then do let me know in the comments and I'll be sure to make that. So let's actually, so this is basically my prediction here. I don't think it will go that low, probably. Again, this is all probabilistic. Okay, I would expect something like this would be kind of ideal. If that does happen, then I would be expecting this is the overall kind of the major target, and then beyond that, maybe a fib extension from the low to the high that we're working with right here, then maybe up to this level, and then obviously the very ambitious targets would be up there. Okay, however, it is also possible that we get up to this point, maybe break down to this other more conservative place, and then continue going up higher after that. Either way, it's the same thing. Once I've established my bias, which I do using the weekly and the daily structure, and I mark out my levels that help me define that, then I just simply go down to a lower time frame, the 4 hour, 1 hour, things like that, and I look for confirmation that the structure of my higher time frame is being abided. And when I get that confirmation, that is a good indication of me continuing up. And one of the good things about aggressive is it's a lot easier, in my opinion, to make money during a down market or an up market, because we can just sell it off instead of buying. Now, of course, you can do this as a passive investor and both inquire and include risk. However, for me, I'm just more comfortable with reading it as it comes. So hopefully that has made sense. If it's come out as a load of gibberish, I do apologize. But yeah, let me know if you would like to see some more videos about me breaking this down, showing you where I'm getting in, getting out, understanding how I'm combining all these concepts for crypto and all this sort of stuff. Just let me know in the comments below and I'll be sure to get onto that. But thank you guys, and I'll see you in the next video.